Okay everyone, welcome back to the Price Action Labs YouTube channel. And so in this video, I'm going to be covering 4 steps to becoming a full-time consistent trader in 2026. These are the only 4 steps that I think you need in any strategy to go from struggling to full-time. And I'm going to break down the entire step-by-step system to make sure that you can follow. And so it all comes down to what I call the 4 P's to profitability, right? So let's dive into it. So the 4 P's to profitability, right? I've packaged this into the premium footprint execution process. And so for those who've been following my channel for a while, you will know that I use footprint charts, but I get a lot of questions about where do I find my key levels? How do I read price? How do I know when to enter? And which candle do I use? And so that is why in this video, I'm going to be breaking down the 4 P's to profitability, right? The 4 steps that you need to follow to take every trade. Now, not every trade is going to win, but if you want to go full-time, you need a process, you need a proven system that you can rely on every single day. And so the 4 steps to becoming a profitable trader in 2026, I call the premium footprint execution process. And it comes down to the 4 P's. So positioning is the first step. It's being able to master your key levels in a way where you know exactly where to trade from. Then we move on to price. This is where the order flow comes in, right? Reading what the market is telling you more so than trying to guess and gamble based on candles, right? Then we move on to price. Then afterwards, proof. So once you've read what the price is doing in terms of the footprint charts, in terms of the order flow, you then want to understand the real proof of the market. So in other words, seeing who is in control every single time you take a trade, right? And the final thing you look at is precision, right? So what candle do you enter off and why? And so the 4 P's to profitability, we want to go round this entire system over here, right? This entire system we want to go round. So positioning, price, proof, and precision, right? Every P links onto the next, and you need every P in order to execute with precision. And so these are the 4 P's to profitability, right? So positioning, price, proof, and precision. Master your key levels, read the market, see who's in control, and then you execute based off the exact candle, right? And so what type of traders are these best for? So it's not just for USA-based traders, but it's for the US stock market traders specifically, right? So S&P 500, NASDAQ, and US 30. So you can trade futures, CFDs, or the options as well, right? It works for any US stock market trader. And so the session that I trade myself is 9:30 a.m. to 11 Eastern, right? Or New York time, right? The AM session is the best session for this strategy. And it's for traders who are looking to get funded 100K or more, or have at least 10 to 20 grand in savings that they can put towards a live account. The reason I say that is because we're looking for 2, 3, 4, maybe 5% gains. So if you're doing that on a 100K funded account or a 20K personal and you can up the risk and you feel comfortable upping the risk, that is the easiest way, in my opinion, for traders to go full time in 2026. And so again, this, I trade primarily New York session, right? So S&P 500 is my favorite. It does work on NQ and Dow Jones as well. So what I'm going to do is I'm going to walk you through the premium footprint execution process with 2 trades I've taken recently, a short and a long. Now, these are both the ES futures or the S&P 500, right? So let's dive into it. So first we're going to focus on positioning, right? Trade positioning. So the premium footprint execution process, right? The first P comes down to positioning. And so I often say 1 key level per day is all you need as a trader, right? So in other words, if you are drawing multiple lines of support and resistance, if you are drawing multiple trend lines, multiple FEGs, multiple inverse fair value gaps, or you're trying to draw a lot of things on your charts, or you have indicators of such, right? That isn't needed. I want you to understand that your job as a day trader is to come first and position your trades. And so superior positioning comes down to basically knowing where your key levels are. This is a topic I get requested about all the time, so I'm going to look to make future videos on how I find my key levels. But for the process of this video, I'm going to be introducing the premium footprint execution process, all 4 steps to applying them systematically to go into full-time trading. And so I'm going to be breaking down a long I took on Friday and a short I took from Thursday. And so the purpose of this video is just for you to understand that key levels are very, very, very important. And they're important for a reason you don't perhaps understand, right? Or you perhaps don't know yet. The reason key levels are important and the reason why overall positioning is important is because the market already tells you where the support and resistance lines are. So if you just take a look at this image you see on the screen, what you can see is I took the short on the left, right? There was a long wick, which I call on the 1 minute chart. And on Friday, we continued on creating all-time highs. Now, the reason this slide is important to me, right? This slide and also this slide is that your trade positioning is very important. That is why it is the first P in the premium footprint execution process. So in other words, if your positioning is off, nothing else is going to matter, right? Even order flow footprint charts, any breakout model, anything, nothing is going to work unless you have the right key level. Right? This is super important to understand. So once you have got the right key level, and yes, I'm moving on from key level because that's an entire video by itself, and I have made previous videos on that, so I recommend checking it out. But once you have understood where your key levels are and you have a good understanding of supply and demand, support and resistance, where to actually take the trade, once you've positioned yourself in the market, you then want to move swiftly onto reading price action. And so there is only one way to read price action. And so just remember this quote, if nothing else. Those who trade without order flow will end up paying those who do. And so if you are a day trader and you're looking to click that buy or sell button, if you do not have at least some kind of conscious awareness of how to read price action, and then more importantly, reading the price action. And so reading it does come down to an acronym, which I'm going to go through. So READ. If you do not know how to read the price action, or you're not consciously aware of what goes into that process, then unfortunately you are not day trading, you are gambling. And so the good news is that there is an easy fix to this if you just follow the acronym on the screen. And so how you read order flow, or how you read price action, comes down to order flow and footprint charts. Now, order flow and footprint charts are a fancy way of basically dissecting two types of orders, right? Market orders and limit orders. Let's make it very simple. If you're reading price action, you want to read the bid and ask. So we start off with the R. You want to read the bid and ask. You then want to evaluate the delta. Right, so let's move on to this. So this was the long trade I took on last week on Wednesday, I beg your pardon, right? Wednesday. Now, I want you to understand, right? At this point, we've understood where our key level is. So assuming your key level is correct, we then want to focus on specifically what's going on inside of the candles. And so the reason I say this is that those who choose to trade without order flow will end up paying those who do. The reason that's true is because you cannot go into $1 million or even $1 trillion market, right, without understanding how it works, or without trying to at least read how it's working. And so I want you to really focus on what you see on the screen, right? Really focus on what you see on the screen, right? This is very, very important for all traders to understand. So you have a left number and you have a right number. And so I beg your pardon, these are actually the wrong way around. So what's going on here is you have the bid, right, which is actually the aggressive seller. So this slide here is wrong. So what I'm going to do is I'm going to go back. I'm just going to go back here. Here we go. So you want to understand, ignore the numbers here, right? Ignore the writing here. You have the left number and the right number. So when you see 0, this is the bid, all right? And then you have the right number, which is the ask. So the left number represents the bid, which is aggressive selling, right? So ignore what it says here, right? And you have the right number, which represents aggressive buying. Okay, so let's go down here one more time. So here we see here 37 for 89, right? This is 37 aggressive sellers hitting the bid, and you have 89 aggressive buyers. Okay, now the reason why this is important is because you want to read price action, not try and guess, gamble, try and predict, or even worse, use indicators to give you an advantage, right? Indicators are lagging, they don't work. You drawing lines doesn't work. You trying to gamble off candles doesn't work. Engulfing candles, sweeps, all these things, they don't work. What you want to focus on as a day trader in 2026 is reading the price action. And so in the premium footprint execution process, this is the price, right? Reading price action. Read the bid and ask, evaluate the delta. Now, what do I mean by delta specifically? So delta refers to basically the ask minus the bid. And so it is basically the right number minus the left number. If you can do the right number minus the left number, you will understand what we call the delta. We want to evaluate the delta, not for every candle, only inside of our key levels. And so what you can see here on the right-hand side, right? Red delta. This represents aggressive sellers, right? Or more aggressive sellers than aggressive buyers. So here we can see 92 for 61. So the delta here is 31. Sorry. The delta here, is 31. So we can see more aggressive buyers than sellers. So in fact, let me just go back to the screen. It'll be easier. When you see red inside of the candles, that means that there are more aggressive sellers than aggressive buyers, right? And that's where we go on to the A over here. So I'm going to ignore this image. It's a little bit misleading. But once you've evaluated the delta, you then want to assess the aggression. And so assessing the aggression comes down to understanding who is trying to drive price up or drive price down at my level. So as a day trader, you've got to understand who is aggressive, where they're aggressive, and what does this aggression tell me. Okay, then the final thing is we want to detect zeros. So in other words, we want to see zeros down here. We want to see zeros down here. The reason we want to see zeros, right? Zeros, you won't see a zero on two sides. So just ignore this image. All right. The reason we want to focus on zeros here specifically is that a zero represents a finished auction, right? A finished auction or a low volume node. That is essentially an area where the market will reverse from. So for this particular image, I just want you to remember the quote, those who trade without order flow will end up paying those who do. Now, if I could just add something to that, it's more about understanding that those who trade without order flow will have some luck at the beginning. On a long enough time horizon, if you're not reading the price action in 2026, you're not fulfilling the second P. Right, you're not reading price action, you're trying to guess and gamble, which is not viable, especially if you want to become full-time, get funded, whatever your goals are. If you don't have a way to systematically and more importantly correctly read price, you're failing at the second P, right? Most people fail at the first P, but a lot of people, they fail at the second P, not because they can't read order flow, they think that they don't need to, which is a big problem. And so after you've gone through that, we then want to you then want to look for proof, right? So the premium footprint execution process, we rely heavily on market proof. And so price and proof often go together. So assuming you've actually read the order flow, right? We now want to understand, what does the order flow actually tell us? Right? What does the order flow actually tell us, right? What proof do we have to go long or short? Because the problem that I often see with traders is that they have a good roadmap, they have a good game plan, they understand roughly whether the stock or an instrument is going to go up or it's going to go down, right? That is essentially why we day trade. But where a lot of traders go wrong is that it's at the execution point, right? And that's what the precision is for. But the only way you can enter with precision is to understand market proof. That's why it's the biggest piece, because understanding why the market goes up and down, understanding what evidence the market gives you and how you can interpret that is very, very, very important. This is step 3, or this is the third P of this premium footprint execution process. And seeing who really is in control is going to differentiate you from yourself who's unsuccessful, right, at this moment in time. So the difference between a successful you and an unsuccessful you is to ask yourself the one question you see on the screen. I want you to ask yourself, when you take a trade, do you ask yourself who is really in control of the price? Who is really in control of the price? Is it the buyers? Is it the sellers? Right? So I'm going to be breaking down a short trade I took from Thursday, a few days ago. And so this short trade is mainly designed, the reason I'm taking these screenshots is to help you understand what I was thinking through in the moment. And so for me to illustrate that, I will just take you to school, right? I will take you to school where the executions are live. So it was a bit of a choppy session, but I'm going to be breaking down exactly what I saw over here. So just before we move on, I want you to be very, very familiar with where we are in the process. So right now we are in proof. So I'm going to assume you understand how to read price. Now we're moving on to proof. And so reading market proof is actually simpler than you think, right? Let's break this one down. So price came into my level around here, right? So I think I've got a better screenshot. So price came into my level here. So top left. Now, what you can see here is you can see this big wick. So this is where practice comes into play. You're not going to master order flow overnight, right? However, if you don't start, you will never be able to master order flow. So another thing I said on X recently is that most traders can become profitable in 6 months. They spend 6 years delaying the first month, right? So it takes 6 months to learn the premium footprint execution process, right? The problem is I see so many traders basically never starting month one. And so if you're going to be a trader who doesn't want to start month one, and it's only a 6-month process, but if you don't start month one, in 6 years, you'll still be looking to start month one, right? So just get a grip to understand, right? It's a 4-step process that takes about 4 to 6 months to learn. So it's about a month per process, right? I say 6 months because you want to put practice in, because order flow does take practice. And I'll tell you why. Because a lot of traders, what they do is they will see this, right? So let me bring this a little bit bigger for you. So they will see something like this and say, oh, price is broken higher, but price is broken lower. That's true. So there's a couple of things I want to say about that. First of all, if your level is wrong, you will not be able to make this work. I repeat that. If your level is wrong, you will not be able to make it work. And so that is the reason why positioning was the first process. Then we moved on to price. So assuming you have the right level, assuming you now know how to read footprint charts or you know how to use footprint charts, we now want to move on to market proof. We now want to move on to market proof. And so market proof is what we see over here. So let us dive into this specific candle, this specific level. So hopefully you can see here, this was the previous P, where if we kind of zoom into some of the numbers, right, we can see 96 for 434, right? The aggressive buyers are a lot more than the aggressive sellers. Even down here, 68 for 648 for 188. A lot of aggressive buyers, and yes, they broke above the level, but you can see here we barely broke above the level, and we actually had a wick, right? This here at class is a wick. Now, what's interesting here is we had a small body, long wick, right? What was going on over here? So let's bring our read framework back. So for those who don't remember the read framework, let me just bring it back for you. So the read framework was this, right? So price, proof, here we go. So read the bid and ask, evaluate the delta. So right now we're evaluating the delta and we're going to assess the aggression. So E and A. So when we go to the charts over here now, what we will see is, let's just break this down. So 122 for 310, 274 for 434, right? These are the blue deltas, right? The blue deltas that are screaming at us. We also see a 0 at the top, right? The reason I'm detecting these zeros is because that is part of the process, right? That is part of the process. Evaluate the delta, assess aggression, and then detect the zeros, okay? So if we take this now to the image, what we can see is 0, 0, 0, 0, right? 0. We see a lot of zeros over here, right? So this is from an order flow perspective, or from a proof perspective, right? What we can see here is a lot of aggressive buyers that really struggle to break above this area. So on ES, this was 61.67 to about 61.70. So we know at 61.70, there are a lot of what we call trapped buyers, right? Even here we see a blue delta, right? Blue delta, even here, blue delta, right? 0. We're detecting zeros, right? And we're seeing the market continuously break lower. All right, so there was my entry. And I'm going to break down how I got that entry. But just for the purpose of this, video, right? We want to be reading the bid and ask, and then we want to see, there we go. So proof, right? What did we see? Buyers in control, sellers in control. And so what I want you to understand here, right, is, again, this is the same screenshot, right? Aggressive buyers, right? Aggressive buy orders, we have blue delta, break to the downside. Now, let me ask you a question which you can think about, right? Whenever you are looking to take a trade You want to ask yourself, what evidence is the market giving me? Not what I want to see, what I think, what I've learned, what I've drawn, what indicators I've used. It's not about you. It's not about me. It's about the market giving you proof to then trade in a specific direction. I'll repeat that. It's about the market giving you proof so you can then trade in a specific direction. And so this process allows you, or this part of the process, the proof process, allows you to do that. And so how do we do that? Or how do I do that? So we use something called the TRAP framework, right? So the TRAP framework, right? The word TRAP stands for trap traders being rejected, absorbed, and then we see a shift in the pressure. Just remember the TRAP framework. Just remember the word trap. Because inside this key level, where I've circled, right, what do you see? Aggressive sellers getting absorbed. And so what I mean by the word absorbed specifically is that they were present, right? It's very obvious. We can see buyers over here, huge amounts of buyers. Price broke to the downside. Even here we see break. Price comes into the zone. Look at that little blue delta there, 113 for 231. We see a 0 over here as well. So hopefully you can see how price and proof come together. So we're using the real-time reading recipe. So we're reading price action. We're not trying to guess it. We're reading the bid and ask. We're evaluating the delta. We're assessing the aggression. We're detecting zeros. We're going through the entire process at our key level. So we've gone through positioning. We've now read price, and now we're at proof. And we're using our TRAP framework to understand who's in control. So hopefully you can see just by going through this is who's being rejected, who's being absorbed, and where is there a shift in the pressure, right? There's a shift in the pressure towards the downside, right? Absorption of buyers, they're getting rejected, they're getting trapped. So just remember the word trap moving forward. Right, and now my entry model. And there's a reason why the entry model came at the end of this video, because it's at the end of the process, right? The premium footprint execution process. The only way you can get a highly accurate and precise entry is by making sure you follow the first 3 processes. And so if you're looking to become a full-time trader, get funded, 100,000 in funded, etc., etc., the mentality of a funded or just a general consistent trader must be process driven, not outcome entry model winning driven, right? That doesn't work, right? So the biggest problem I see is that traders look for a precise entry without having any kind of positioning, reader price, and understanding of price. And so the problem with that is that sometimes it works, sometimes it doesn't. You end up going through this weird fatigue cycle, right? Where some trades work, some trades don't, and you go through this up and down motion. The reason that up and down motion exists isn't because you're necessarily a bad trader. It's because you have no framework to build your entries from. And so by following the entire premium footprint execution process, your entries can become a lot sharper. And I want you to remember the word BOLT. So what does BOLT stand for? So BOLT stands for break, optimal retest, liquidity absorption, and then I pull the trigger, right? So this is the entire premium footprint execution process, right? So I look for a break, I then look for an optimal retest, I then look for a liquidity absorption, and then I pull the trigger. And that is how I find precise entries. Again, 2 things on this. First of all, if your levels are off, it's not going to work. If you're not using order flow, it's not going to work. And even in the precision entry process, the BOLT breakout blueprint, I also use order flow. And I'm going to break down a couple of chart examples quickly just to get my point across. So this is S&P 500 futures, and I'm going to be breaking down Friday's long position. Right, so I took a long on Friday. This was roughly around here. Only about 1 hour. I closed the trade early. I wasn't happy with the chop over here, so I closed just before this happened, which was a bit of a shame. But it's okay. It's more important to understand we're breaking this down. So what I'm going to do is I'm going to quickly break down Friday's trade from the lens of the premium footprint execution process, right? So the premium footprint execution process, if I get it up, quickly give me a second to do that, right? So while I'm getting this up, I want you to understand Friday's trade wasn't just Friday's trade, right? Friday's trade came at the right level. And so here's what it looked like, right? So whenever you have a trade, I want you to imagine this, right? Imagine the process that I've got here, the premium footprint execution process. And so this works in an interesting way. First, we had positioning, right? So this was my key level from Wednesday. Now, if you're wondering where that key level came from, so typically it comes from a price imbalance, right? So here's where it came from. Now, again, finding key levels is a skill and a process in itself. I'm not covering the entirety of that in this video, right? I've made separate videos on that, but this is the price imbalance right here. Right, there is the price imbalance. And so I use the candle before the fair value gap or the price imbalance to give me the key level. And so this key level, I just keep extending it to the right. And so that's basically how I find levels in a nutshell, right? And so what's really going on here is that this became Thursday's short, which then gave Friday's long, right? So longs on Friday actually came from shorts on Thursday. Just as a side note, something interesting to bear in mind, right? So notice how the market shows you where the support and resistance zones are. It's not your job to go and look for them, right? So the market shows you where the support and resistance zones are. It's up to you to go and find them, right? So let's now break this down. So we've gone through positioning. That's step number one. Let's break that down. So step number one, positioning. Now, step two, price. So I'm going to be breaking down specifically what was going on inside of this level, right here. So let's quickly do this. Let's do this. Let's try and understand what was going on inside of this level here specifically. So on School, I made some posts on School about this. So let's break it down. So this was Thursday's trade. And then Friday's longs. There we go. So if we go here, okay. So there we go. So live commentary of what was going on, right? So again, I'm looking for this trade. I'm looking for this trade. Here we go. So another couple of things. So this is me updating live. So I will say this until the cows come home, right? Know your levels. Stop thinking you can guess them, predict them, or where they might be. Or even worse, try and draw them up, right? You want to read, so READ, where the market shows you the levels are. Sit back and wait for what you get. No level, no trade. And so going into Friday, I had my levels marked out. Again, levels are super important. You need to know how to find them, and you need to use order flow to get them. All right, you don't rely on drawing them. You use order flow to get them. There's an entire system for that. Go through my channel. You'll find some videos. But I was looking to go long off key level 1 or key level 2. So typically I went off key level 1, the higher one. And so here's where I really started to break things down. So here were my levels. We had rejections. And so around 10 a.m. Eastern, market started stalling like normal, key level 1, key level 2. Rejections came here. So hopefully you can start to see here, red delta. We saw this huge red delta, right? There we go. Inside the zone, we start bouncing higher, right? That's this region here. Now, once you've understood that, let me go to the actual trade execution. So there was my trade execution roughly here, right? There was the order flow. There we go. So my execution came at 71. 68.8. So let's just say 71.69. Right, so 71.69 was my entry. So that was here. So let's break this one down. 71.69. Right, 71.69. So 71.69 stops below the zone here. And realistically, my initial target was the highs of the previous day, but I never held it up this high. Okay, I only got 1.5 R. So now the trick now for me is I want traders to understand what was going on here. And we're going to use the Bolt breakout blueprint. So how does the Bolt breakout blueprint actually work? So what I look for is I look for price to break above my level. So this is one thing I look for. You see this candle here? This is the B. So if we go now to let me see. So if we go now to here, right, we're trying to enter with precision. Now, this is where we are. This is how the Bolt breakout blueprint works. So I will take a red line and I will draw the line just like this, right? That is my break right there at the level. So now from here, once we see price coming back in, so we've had break, we're now looking for an optimal retest. So it's down here. This is our optimal retest. And so it looks something like this, right? If I just get it up, there we go. So here is the retest here. So hopefully you can see here a ton of aggressive sellers, right? Even here, if I break it down, here we go. So let's really break this down. Now, again, if you're trading without order flow, maybe question why, or more importantly, why you're even trying to trade in the first place, right? So if I just break this down for you, there we go. So order flow, and then we have our image somewhere like this. And so hopefully you can see here now a correlation between this image and also this image here. Right, when we dive in, hopefully you can see this. So we see a finished auction, so we've detected zeros, huge amount of aggressive selling. Even here we have, you know, if we just take a look at it, this was our break. And so I'm only looking to go long after we get above this red line. This is very important to understand. So anything that happens here, I'm not interested in entering. I only enter as we pass this line here. That's very important to understand, right? I only enter as we pass this line. So here, I will go long at this point. So there's my long position here. So I'm waiting patiently, I'm waiting patiently, I'm waiting patiently. Even here, I'm not going to enter here, right? I'm not going to enter. I'm waiting patiently. There you go. There is my entry. The reason this is my entry here is because we have passed this line here. So I will have my stops below this zone, right? And I will go and target the most recent high, right? That will be my hard stop. Okay, so what we've effectively done is we've used the footprint charts to go through the entire Bolt breakout blueprint, right? So this is what the Bolt breakout blueprint looks like. Break, optimal retest, liquidity absorption. So what does that L stand for, right? What does liquidity absorption stand for? Well, liquidity absorption in simple terms refers to which side of the liquidity, which orders were trapped, which orders were unable to fulfill, which orders were unable to win, right? Similar to the absorption principle, who is trapped? So let me ask you a question. If you see these aggressive sellers, right, but the market broke higher, right? That was my entry here at 69, right? 71.89. Aggressive sellers absorbed, right? This is the reason why the markets went up, right? Markets went up because the liquidity of sellers were absorbed, right? And once I saw that, I then pulled the trigger. It's very important to understand you follow the system, right? So we look for break, right? Optimal retest, liquidity absorption in the level, and then I pull the trigger. And so this is the Bolt breakout blueprint, right? B-O-L-T, the Bolt breakout blueprint. And so this is ultimately how I enter. Right, and so that basically sums up the entire 4 steps, right, to becoming a full-time trader in 2026, right? So let's quickly have a summary of what we've gone through, right? So if I just go back here, let's just break down what we've gone through all the way from the beginning, right? Let's break this one down. So there we go. So what we want to do is try and understand things logically. So the 4 steps to becoming a full-time trader in 2026. And so the 4 P's, like I'm just going to sum up quickly, is you want to have good positioning. So understand where to begin taking your trades, right? Understand which key level to trade from. Then you want to understand what the footprint charts are telling you, right? What is the market telling you? It is not your job or your business, or quite frankly, anything to do with you, right, to try and predict the market, right? Your job is to read the price action, not to guess and gamble it, right? This is one of the key principles you need to full-time trading in 2026. The third thing you need is proof, right? Seeing who is in control, right? Understanding who's in control will give you the ultimate edge. And that obviously leads to precise entries, right? So being able to execute with precision comes on the fact that you've understood market proof, you've read the price, and you've had good positioning. Right, this is the premium footprint execution process, and so I'm going to end on this slide, and I just want you to maybe take some notes, take a picture of this, and try and understand. You want to try and apply all 4 concepts to make it work. Right, good key levels. Use footprint charts to read what the market's telling you. Use that information to tell you who's in control, and then with that information, you know exactly which candle to trade from using the Bolt breakout execution blueprint.